Do you want to learn what is stock market? How does it works? Well, this video is for you. Most people make money investing in stocks, but there are also people who lose money doing the same thing. Let's rewind a little bit. The history of stock markets isn't as clear as it could be. Many scholars claim that stock trading began in the early 17th century, although there is evidence that this goes all the way back to ancient Rome, where there are records that shares were traded. In 1602, the Dutch East India Company wanted to trade gold, spices, porcelain and other things around the globe. But of course, running this massive operation wasn't cheap. To fund it, company asked help from the citizens. People who could invest money to support the trip in exchange for a share of the ship's profit. Thanks to the people, Dutch East India Company traveled around the globe, increasing profits for both investors and themselves, selling shares in beer houses, shipping ports and unknowingly invented the world's first stock market. The world's first formal stock exchange was created, the Amsterdam Stock Exchange, initially to promote the trading of shares issued by the Dutch East India Company. Today, the stock market has schools, careers, and even whole television channels dedicated to understanding it. At the moment, the New York Stock Exchange is by far the largest stock exchange in the world, with around $20 trillion of market capitalization. They still do it the old-fashioned way, with real people trading on a real exchange floor. Nowadays, it's never been easier for ordinary individuals to start investing in stocks. Several online brokers allow you to open an account, with low opening balances and low fees, some even with $0 commissions. So, how companies and investors use the market today? Let's imagine a new electric car company decides to launch on the market. First, the company will advertise itself to big investors. If they think the company is a good idea, they get the first crack at the investing and sponsor the company's initial public offering, also known as IPO. This launches the company onto the official public market, where companies or individual who believe the business can grow and could become profitable might buy a stock. If they decide to buy a stock, they become partial owners in the business. If the company becomes successful in the future, the stock price will rise. So as the cash of the investor. The more companies or individuals invest money in the company business, so much more the stock price is raised. For the company, this increased interest helps fund new initiatives and boost company's market value. Funding is an important step for the company's startup. For example, Tesla and its initial public offering sold over 13.3 million shares at $17 each. This earned Tesla over $226 million from investors. Nice startup, don't you think? However, if for some reason, a company starts to seem less profitable, the reverse can also happen. If investors think their stock value is going to decline, they will sell their stocks with the hopes of making a profit before the company loses more value. When stocks are sold, the stock price falls, and with it, the company's market value. Companies are under the unavoidable influence of market forces, such as fluctuating price of materials, inflation rates, behavioral factors of traders and investors, demographics, bad publicity, trends, and even bigger factors like new laws and trade policies. All these variables cause day-to-day noise in the market, which can make companies appear more or less successful. And in the stock market, appearing to lose value often leads to losing investors, and in turn, losing actual value. Human confidence in the market has the power to trigger everything, from economic booms to financial crises. However, the stock market is one highly unpredictable system. But it's not just for the rich and powerful. Everyday investors can buy stocks in many of the exact same ways a large investor would. Well, that's from me. Hope you enjoyed the video, and don't forget to subscribe.